Hello traders, Gary Wagner here just after 10:30 in Honolulu, 4:30 in New York on Wednesday, the 30th day of July 2014, and this is the daily report for gold and silver. We have a mixed bag again in the precious metals markets, with silver and palladium trading higher, gold and platinum trading lower. Of course, first to gold. Currently, you can see we are trading well below 1300, 1296.24. That is our current print on the screen, with a low of 89.90 and a high of 1303 on the day. And for the second day in a row, we see silver higher with gold lower, currently trading up roughly a nickel on the day, $20.60 per ounce, with a low of 20.37 and a high of 20.81. More on silver towards the end of the show. Some solid economic news today, which was released, as well as some information coming out of the Fed, has strengthened the dollar. The dollar has been moving strong for, I believe, the better part of a week or 2 weeks at this point. We do have continued pressure on gold, as we can see it trading again well below 1300. The low, though, is what I'm finding significant in the market, because we're trying to ascertain whether or not we have any kind of real support in the area of about 1291. Now, that was our low today. Just below that, you can see that right here, because my sense is that if we do not hold here, the market's probably going to head to about 1280. But I believe that either of these two spots should provide a level of support to complete this most current corrective action we've seen in gold. Because consider, the market traded as high as 1345. That's coming off of a rally from 1241 as it moved up. And when we look at the different retracement levels, of course, 61% takes you to 1280, and the more shallow 50% takes you to 1291. Now, when we look at the market itself, we can see that this conclusion of this A wave occurred absolutely at this point. Market then trades up roughly 50% of this correction, or the A wave begins to move down, and we've had a similar scenario in which we have had a series of lower highs on the way down. Of course, that's what we're looking for as the market is trending lower. So I'm looking at this high, comes in, finds support, moves back up a little bit, and then I compare it to this high here. So all in all, we're at a pretty critical junction, and the real question is going to be whether or not the market can find support in this particular area. Because my sense is that once we see this market conclude this corrective phase, we're going to go back into an impulse phase. And that impulse phase, I believe, which began at the beginning of June, is going to be our subcount, and it's a subcount really of wave 3. Wave 3 typically is going to be the largest, or can be the largest, of the three impulse waves, 1, 3, and 5, but it is never the shortest or smallest of any of the impulse waves. So we talked really about the big picture yesterday, and we touched upon it ever so briefly, so I kind of wanted to go back and explore it. Consider this. Market is in a record territory. It moves to that record high 2011, culminating just before the conclusion of 2012 at 1900. From there, we had a series of lows, call it a flat bottom, and a series of highs roughly at around 1800. And the market truly oscillated between those 2 points for the better part of a year, pretty much all of 2012 into 2013. You can see it kind of moves back and forth within here. And then, of course, we had this very, very strong break, and that took us to the first of a double bottom, the first of which occurred really in July 2013. Takes you back. This is that one rally that we speak about that takes us to over 1400, and then the market comes down, and this is what's interesting, because as this market comes down, it truly forms some sort of a double bottom. So the question we really want to explore We can see a very, very similar kind of band or pattern when we look at the market at this double bottom here and the series of bottoms at 1534. And we're getting a very, very similar activity in which the market is trading within this defined range. The question is, are we experiencing some kind of change? Because if we are, this is what we're looking at. And this is the criteria that we'll really need to see to determine that. Just as when we look at our parameters, when the market had a high of 1800 and these lows of 1534, there was a pinnacle up, a critical point in which it broke hard and broke obviously to the downside to take us out of that sideways pattern. Now, let's look at our double bottom here. We've got our first bottom, our second bottom. Those are well in place. We do have a series of tops, although the tops haven't been as close, but here you get about, 1435. Here you've got 1391. So you do get a lower high, but you get an equal bottom here. You get an equal bottom here. As it comes down, it does make a higher low. And so the question is this our terminating point right in here all the way out through 2014? Are we in a different sort of a ball game? And I'm really addressing this most recent trading activity that has occurred during 2014. And here's how we'll know. Just as this market strategically and strongly broke below it, what we're going to need is the market to strategically and strongly break above this point. So what we'd be looking at, I believe, is going to be something like an impulse of 1, wave 2, and that's what I mean. I believe that our current count puts us in wave 3. Now, within wave 3, of course, this is a much longer term chart, our weekly chart. Within this wave 3, we're probably going to get a 5 count, meaning 1, 2, 3, 4, and of course that fifth wave, if in fact we're looking at an impulse cycle, has to begin at some point to track and trade above this. Because if it cannot, we're simply looking at really a continuation, not so much of a sideways market. It's a pretty dynamic range when you consider 1180 on the low and for its $250 range. Just as here you had a little bit wider of a range. You had 1534 to 1800, so over 200, but the same sort of scenario. And my sense is, just as we saw this market break really hard when no one really expected that break, a lot of us were looking for the market to stabilize right at this point because we had this tremendous bottom in place that had shown really, really strong support over a long, long period of time. I believe that we will see at some point, and I believe that that point could be here, in which we'll see this market begin to track and move above 1400. So that, to me right now, is really the big picture that we're looking at. In terms of where we are currently, we're waiting to see some sort of confirming action to determine whether or not this downtrend right in here has concluded. And of course, we're doing it with this much shorter term chart, our daily chart here, and we're trying to determine, again, this was that first part of the rally that we looked at on our weekly. As I said, I believe that we are now in a second, and then we'll move into a third. So the whole idea is this: if in fact this model holds, if it has weight to it, if it has merit, and that's how we see the market unfold, as I said before, whether it's 1291 that we enter the market or 1280 that we enter the market is no matter, because the whole idea behind it is catching this large rally, this impulse wave that should occur when this corrective wave culminates, terminates, or concludes, any way you want to put it. Now, just as much as we say that silver tends to run in unison with gold, there are absolutely some key differences. And when we look at the market right now, what we're looking to ascertain, of course, is whether or not we're going to see this market find support at these bottom areas right here. We do have some minor support at 2045, or if it will test the low 20s. And I believe that that only could occur if we see gold go down to 1280. We've seen over the last couple of days silver being more supportive in terms of price move and momentum, and realize that I believe that that is the industrial component of this metal. But I don't think that we are out of the water, so to speak, yet. We have to watch this market closely and strategically set up our game plan, which is what I have just explained to you. This is Gary Wagner wishing you, as always, good trading. We will talk to you tomorrow on Thursday for another daily update and review. Bye-bye.